is Carolyn, Kiwi Trader 24 from Twitter. I'm the one who's been posting this super complex chart of the S&P 500 that I call the roadmap. I've been posting that just about every day for about the last 11 years on Twitter. If you're interested in some information on my private Twitter account at Kiwi24Carolyn, you can click the link in my profile and it'll take you to a bunch more information about that account. That's where I post most of the time during the day, with occasional drop-ins on my public account, and always updating this chart about just about every day for you guys. All right, so our S&P 500 ended here on Friday at a new weekly and daily all-time closing high with no topping tail out the top of the daily candle like we had been seeing on the way up all week long. Pretty nice, to finally end the week without a big sell program at the end of the day that ate up about half or maybe even more than half of the day's range. Ended right off of the high, new all-time closing high and new weekly all-time closing high, excuse me, as well. This is usually a setup that leads us to another new all-time high within the next two sessions. We made an all-time high on Thursday with a new all-time closing high. Traded on Friday, unable to make a new all-time high, but a new closing high. We will get that new all-time high usually within the next two sessions. What's happening next week? Well, we have Monday, we have Tuesday, and then Wednesday we have the Fed. It's the perfect setup to have at least one more day, if not maybe two more days, of rallying before resting and waiting for the Fed to spook the market and make us sell off a little bit. I don't know if that's going to happen for sure, but we have kind of sold off the last couple times the Fed has come on. And unless the Fed really quells the worries about hiking interest rates and about their worries of inflation, unless they can really quell that, we probably will get a little bit of weakness Wednesday, maybe the beginning of the day Thursday, but we'll probably wind up coming back and finishing strong to end the week. Anyway, so let's get on to some levels. Up above us right now, coming out of the gate on Monday, we still have an unresolved all-time high on ES that printed overnight one night in February at 39.59.25. And now that we are on to the June contract as the front month contract displayed by most brokers, that's going to take the S&P 500 much higher in order to resolve that in the light of day in regular trading hours together with the parent and the child, the parent being the S&P 500, the child being the derivative ES. It's going to take us all the way up to S&P 500, 39.68.75, if not a little higher, because there's about a 9, 10, 11 point spread with this fresh ES contract right now. If we can get above that and print two new all-time highs together in regular trading hours, maybe we're going to push all the way to around 39.80 to 85. At 39.82, we will be plus 6% up on the year, and that might be a good place to hold and wait for what the Fed has to say. Because once we get to about 39.80, we're either going to push through to 4,000 or maybe back test around 100 points, coming all the way back down here to about 38.80 once again, and testing some other stuff that's in our way here. Okay, so on the downside on Monday, if we come into the day and can't hold above about 39.37 or so, that is the halfway back point of Thursday's range where we set our all-time high. Then we test down here to the lows that we set both on Thursday and Friday at the 39.15s. This is also where Wednesday's high took a little look above and failed. I think if we come down here, this is going to be an excellent buying opportunity to get into some March expiration S&P 500 calls that are going to take us up to this 39.68, if not 39.80 level. If not that, the end of the day on Monday, then at some point on Tuesday. If we, however, break down below 39.15, then we are going to have a little bit lower to dip all the way back down here to about 38.91 to 38.86. This will fill one of the three gaps we made last week. That's what these purple bars are all about. And it will backtest the 10 and 20-day simple moving averages. I do not think before the Fed that we will break any lower than this, because when we open up on Monday, the 10-day is going to be pulling up a bullish cross through the 20-day, creating a buy signal. The last time the 10 and the 20-day moving averages met each other was back here on March 1st with a bearish cross. And we came into the day that day rallying and trying to fend off and ignore this bearish cross, only to be met on Tuesday by a lower high and the beginning of a 3-day massacre that took us down 200 points. This was in the wake of a bearish sell signal, a bearish cross with a 10-day crossing down through the 20-day and the 20-day rolling over and beginning to fall. Well, now both of these moving averages are turned up and rising, and the 10-day is going to pull up through the 20-day and create the absolute opposite event of this. Now, I don't know if that we can rally 200 points on this element, but I certainly think we could rally up to 4,000 in the wake of that element, at least. Okay? If I am wrong about all this and we break down below the 10 and the 20-day simple moving averages and fill this gap, I think we'll come down to maybe this third gap and hold here, because the 50-day simple moving average is rising through this gap, and it's going to push through here by about Tuesday or Wednesday and be sitting here to offer us support. Maybe we take a look below it, but I do believe we will close back above it. I don't think that we'll be breaking down below the 50-day again, not with all the bullish stuff that's about to hit us in economic numbers coming our way in the near future because of all those stimulus checks going out. Okay, that's it. I hope this video helped you out and gave you a better idea of where we are at and where we are going. I bet you didn't realize that there's this unresolved level on ES. I bet you didn't realize that 39.82 would get us at about 6%. And I bet you didn't realize that we usually fizzle out around the 80 handle and pull back a little bit before venturing on to the next big hurdle on the S&P 500, which in this case will be 4,000. Okay, have a great rest of your weekend. As always, good luck and good trading.